Hello, and welcome to the second episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. With me, I have Robert Mbogo, Financial Markets Consultant at FX Pesa. So if you have any questions, feel free to type in the live chat, and we'll be responding to those questions on the go. So as per now, I'd like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So I hope you don't mind today. We are not doing anything official. It's a public holiday. We are celebrating the Mashujaa. So we hope that you had an awesome day. So hello, boys, and welcome to the session. Thank you for your response. I always appreciate these. So the topic for today, that is the Market Pulse session, will be focused on Euro USD as a currency pair. It's the most widely traded currency pair among all other currencies in the world. So in the last episode, that is the first episode, we looked at trading commodities with key focus on Brent oil. So if you have not gone through the episode, make sure that you go back, check episode number 1 on the series, that is on the FX Pesa channel. Then from there, you will understand how to trade Brent oil, and also you'll have a clear understanding of our outlook for the current quarter. So this quarter basically began at the beginning of this month, 1st of October, and will end at the end of the year. So quarter 4 is always very volatile, very interesting to trade. So make sure that you go through it. And also, if you're a beginner, you have never traded before, we have a very specific series for you. It's available on YouTube. It's called the Novice to Pro series, available on the FX Pesa YouTube channel. So I see there's a lot of comments here. Thank you, Emperor Traders. Welcome, Dennis. Welcome, Owen, Joseph, Matt, Charles. Thank you, guys. We have a member from Mombasa. Welcome. I see our financial literacy program was very active in Mombasa. So welcome, guys. Let's see where we can get with this. So I'll begin with pretty simple stuff. So the chart that you have here is the chart of Euro USD. So the current exchange rate for the euro against the US dollar is 0.97998. So basically meaning that you would prefer to have a dollar than a euro right now. And it's a crazy time. We have never seen this before, at least in my career of trading. So the last time that the euro was trading below the dollar was over 20 years ago, and by then I was not actively trading in the markets. So let's get this started. How do you trade Euro USD? I'll start with a very simple response to this. The very first thing that you need to do, go to the FX Pesa website, that is fxpesa.com. Then from here, you can basically start by registering for an account, which is pretty much simple. So you basically click on a real account or a demo account if you want a practice account. So once you do this, let's say you go for a real account, you do your registration. For me personally, I'm already registered, so I don't need to go through this. So even if I fill my details, it will not work. So if you already have an account, then you basically log in. Then from here, enter your email followed by your password. And once you are logged in, then you have successfully created an account. So download the trading application from the same website. And once you download the trading application, you will have something similar to mine, but not the same. So the chart, or what we call the MetaTrader 5 trading application, basically looks like this on a Windows device. It's also very similar to an Apple device, but a little bit different on a mobile, that is an Android device. So for today, I just want to give you a quick highlight of how you go about it. So the first thing that you need to do is to go to the market watch section. This is the market watch section right here, and then find the Euro USD currency pair. If you can't find it, you can just click here and then type very quickly EUR USD, and that's the symbols for Euro USD. So once you get the currency pair, right click, go to the chart window, the chart will load here, and then from here you'll be able to visualize the different movements of Euro USD. So the chart is not very friendly. It's not very easy to read. So I'll try and customize it for you so that you understand how it works. So right click on any empty background, these black backgrounds here, go to properties and then change the properties from here. So you'll begin by common. So from the common tab, nothing to change. Just make sure you don't have bar charts or line charts. Just make sure you have candlesticks, which is the most popular way of charting. Then go to show section. At the beginning, you'll notice that the default chart just has one price, which is the bid price. So if you're not conversant with what the bid and the asking price are, then I probably suggest you go back to the Novice Pro series, cover the basics, all the beginner stuff is available there, and then you jump back to this session. So show the ask price range, you have both of your prices here, remove the grid, add period separators, and remove the tick volumes. They're not important as much in Forex, but they are important in other markets that are centralized, markets where you can track volume, and then you can remove your trade history, then go to colors. So for colors, just change the scheme to a black on white. This is more appealing to me, has better visuals. So for the bars going up, use the green color, whereas for the bars going down, use the red color. So for the bull candle, that's a candle going up, use the green color. And for the bear candle going down, use the red color. So the prices are not very clear. So for the bid price range, we're going to use green. And for the ask price range, we're going to use the red color. And now our chart is customized. Click OK, and the settings are applied to the chart. So you can always zoom in and zoom out to basically look at more price history. So once you get everything set, you need to save that as a template. You don't have to repeat this process every time you want to customize your chart. So right click on any empty section, any white section here, go to the template section, and then save as a template. So let's call this Market Pulse. This is the name of the series. Then from here, save your settings here. So if you are to open another chart, let's say pound USD, right click, go to chart window, you just apply your settings. So right click, go to templates, and then select the Market Pulse template. So that's it. So let's go back to Euro USD. This is the pair that we are focusing on today. So whenever you're trading Euro USD, notice that there are two prices, bid and ask price, and the vertical dotted lines are what we call the period separators. They show you the price action based on different periods. So you are simply visualizing the price action from today. That is where the vertical dotted line starts. Then price goes down and then up, down, up, down, up, down. And this is the current price here. So you're able to visualize it yesterday. This is what happened yesterday. Price opened here, went up, and then all the way down, up, down, and closed there at the end of the day. So the period separators help you visualize different periods. So now that we have opened and customized our chart, then the next part about trading is trying to understand the price action or the price history. So when you're trading these assets, these are three main ways that you can do your analysis. One is technical analysis, two, fundamental analysis, and three, sentimental analysis. So when it comes to technical analysis, you're trying to understand the price history. You want to tell a story where price has been, where price is right now, and use that story to project, basically speculating that the price is now headed to this particular point. So the history of price is very important, so you need to understand it in order to speculate on where the price is headed next. So looking at these candlesticks, the green and red bars, they are called candlesticks. You want to understand where they have been, how they have been doing. And once you understand those concepts, then it becomes easy to speculate on where they are headed. So today's technical analysis will be taking on this particular section with Robert Mbogo. But for now, I just want to give you a quick highlight of Euro USD and the direction it has been taken. So this is the 4-hour chart, basically meaning that we are looking at each candlestick representing the price action summary of every 4 hours. So from here, if I zoom in from my period separator, this is the first 4 hours of the week, and this is how basically the price has been performing, going up, and then back down, and then up, and this is the current price as at right now. So if I zoom out to view more price history, then you can generally tell that price has been generally going downwards along a bearish channel of the 4-hour chart. So clearly, it's a no-brainer. It's very easy to understand the price action in this particular market. So it makes it very easy to speculate on the direction and the movement of price, and also to understand the different stages or the price levels of these particular assets. So you can see the different price levels and the way the market has been consolidating, moving upwards, and then down, upwards, downwards, upwards, downwards, upwards, downwards. And this is basically a simple cycle of consolidation versus impulse movements. So I won't be touching much on these. I'll be moving on to the next part of analyzing a currency pair, trying to understand the next direction. So remember, this is the exchange rate between two currencies. one being the euro and the other being the US dollar. So when you're thinking about whether the currency is moving up or down against another one, then it's pretty much important to understand the factors that influence the demand and supply of these assets. Remember, the current price of this particular asset is represented by the forces of demand and supply in this market. If there's more demand for euros than dollars, then the price goes up or the exchange rate goes up. On the other hand, if there's more demand for dollars than euros, then the exchange rate goes down. So when you study the factors that influence the demand and supply of these particular assets, then what you're basically doing is called fundamental analysis. So in fundamental analysis, you study the factors that influence the demand and supply of these assets. So what are the factors that influence the demand and supply of the US dollar? And what are the factors that influence the demand and supply of the euro? So let's start with one, the US dollar. So for the US dollar, we know that one of the things that influence the demand for the US dollar is economic production. If there's a lot of economic production happening in the US, then obviously there will be higher demand for the US dollar. So the same case applies to all other economies. So if, for instance, in Kenya, this is where we are, if we were doing a lot of economic production, then other people who are looking to buy stuff from Kenya, they have to first buy the Kenya shilling and then use the Kenya shilling to buy our products. So the same case applies to every other economy. So if demand goes up, or if economic production goes up, then demand for that particular currency goes up. So what other factors influence the demand for a currency or the supply of a currency? So one key factor, which is one of the most premium factors affecting the markets right now, is central banks. So whenever you think about it, central banks are the ones that basically have the general role of printing currency. So they basically manipulate the supply of a currency. So whenever you follow the central bank policies, we basically describe this as monetary policies. We are looking at how they manipulate the demand and supply of a currency. So for instance, if they're looking to expand the economy, they make sure that there is a sufficient currency flowing around the economy, and this tends to have an inflationary effect, where the currency tends to lose value. For instance, if you look at what happened during 2020, central banks around the world, that is majorly in the West, that is the US, the Eurozone, we had Australia, we had New Zealand, Japan, including Kenya. They lowered interest rates and also engaged in what we call a stimulus program or quantitative easing, where they basically printed more money and pumped this money into the economy by basically buying risk assets, mostly mortgage-backed securities. They also bought a lot of bonds in the market. So when you think of bonds and mortgage-backed securities, they're basically certificates. So they buy certificates and dish out the cash to the economy. So once the financial institutions get all this new money created in the economy, then they pump this money to the economy. So when they did this, then there was a higher supply of currency, and this drove the bull markets that we experienced in 2020. Case in point, let's try and look at the S&P 500. So just a moment. So somehow my chart is not loading quick. It's quite slow. All right, I'll try and find an alternative. So I'll share my screen, go to a new tab, go to SP 500 soft on Google. This will still drive the same point home. So this is the S&P 500 chart. So I just want to look at the last 5 years. So this is how the S&P 500 performed since 2020. This was the beginning of the pandemic. So the lowest price that you see here was in March 2020, when a lot of lockdowns were declared across the world. So since this particular period, you can see that the top 500 companies in the US performed really well. And there was a bull run that lasted roughly 2 years. So this bull run, or the top performance of these companies, was incentivized by the central bank, where it implemented two simple policies. One, lowering interest rates, so the cost of credit was very cheap. And two, they did a quantitative easing program, pumping more money into the economy, and this drove stock prices high for a continued 2 years. However, when you focus on the currency itself, the currency started losing value, as when you create more money, there's plenty of currency, then the currency loses value. So since then, you've been experiencing a lot of inflation, and this inflation has caused a lot of mayhem in the markets. So trying to move very quickly, once they realized that the inflation is getting hotter, and this was earlier this year, they reduced all the stimulus packages to zero, and then they started tightening. And when you talk about tightening, it's basically removing liquidity in the markets. So in March this year, that is 2022, the Federal Reserve Bank of the US started hiking interest rates. So by hiking interest rates, basically means you are making the cost of credit more expensive, and you are basically reducing amount of currency supply in the market. So since then, what we have experienced is that these particular assets started losing value. So if you look at March, this is February, this is March. So from around March, this is when we started seeing a very strong bear market start in stocks. So a lot of shares started losing value, and we've been experiencing a bearish market since the beginning of the year. So if you look at the year-to-date performance, that is since the beginning of the year of the S&P 500, then it's quite clear, it's down 23.28%. So on the other hand, once they started reducing the amount of currency in the US economy, then the US dollar started strengthening. So by just taking these points in consideration, then if you look at the Euro-USD currency pair, and then you zoom out backwards, then you can notice something similar. So this is the performance of Euro-USD since the pandemic. So April, March 2020 was right here. The US starts printing a lot of dollars. That is inflationary in nature. The US dollar starts losing value, and the euro was gaining against the dollar because it was not as aggressive as the Federal Reserve Bank of the US. So in 2021, there was some sideways movement. You can see the swing down, swing up, swing down. It's more or less like sideways movement. And as we approached the end of last year, started seeing the euro start losing against the dollar as the Federal Reserve Bank of the US started reducing quantitative easing program way faster than the ECB or the European Central Bank. So since then, at the beginning of this year and the continuation since the beginning of the year, it's quite clear that the US dollar has been very, very strong since it has been very aggressive about hiking interest rates, which has moved from a range of between 0.1 to 0.25% to the current level of 3.1 to 3.5%. So just a quick snapshot. So if you go to the Forex Factory website, you're able to visualize the interest rates for major central banks. So as you can see, New Zealand seems to be the one having the highest interest rates. I'm hoping everyone can see this with 3.5%, Canada 3.25%, US 3.25%, Australia 2.6%, the pound or the UK 2.25%, the Eurozone, in this case 1.25%, Switzerland 0.5%, and Japan negative 0.1%. So clearly, you can see that the interest rates in the Eurozone are significantly lower than the interest rates in the US, which is at 3.25%. So with more interest rates being hiked, basically means that more liquidity is being pulled out of the markets and the currency tends to strengthen. So if you look at the pace that the euro is taking versus the pace that the US is taking, then it's clear that the US is more aggressive. So this year alone, the Eurozone has only hiked interest rates twice, from 0% to 0.5%, and then from 0.5% to 1.5%. So for the US, it has been around 4 times. We have seen in the last 3 months, they have been hiking by 0.75%, and this is clearly way more aggressive than what the Eurozone is doing. So when one central bank is very aggressive about strengthening their currency against the other, then there's no thinking about it. It basically means that you expect you expect this particular currency pair to be moving downwards, where the euro is continuously losing against the US dollar. So what fundamental analysis does, it doesn't give you an entry. It doesn't tell you to sell the euro USD here. It doesn't tell you to exit the market here. It basically gives you a bias. So if you've been trading this particular market for the entire year, you don't need to think a lot about the direction of your trades. Clearly, the direction of your trades is majorly bearish. So in this case, if you take any random trade between the beginning of the year and the current date, and you chose a short selling trade rather than a buy trade, then there's a high probability that you'd have a winning trade since the market have been going down most of the time. So remember, this is a game of probabilities. You want to be making money when the price is trending in a particular direction. So as long as this trend continues being bearish, then being bearish most of the time basically improves your trading opportunity and also your winning probabilities. So in this case, when you're looking to benefit from this particular movement, the other skill that you'll need is called technical analysis. You need to be able to understand different price levels and different market cycles in order to time your entries very well, as well as your exits, in order to make maximum benefit from this particular currency pair. So the news that you need to watch is the news from the central bank of both economies. You need to know the policies that the ECB or the European Central Bank is taking versus the Federal Reserve Bank of the US. So at the same time, you need to look at the economic growth of both economies. You need to know the GDP of both of the economies. You need to know how manufacturing is doing, how the cost of living is doing. You need to know about the surveys that are done every month within those economies, mainly focusing on consumer as well as business confidence. So once you understand these dynamics, then it becomes easy for you to speculate on the direction the Euro USD is taking, and then use your technical analysis skills to make your market entries and exits. And when you combine these with a proper risk management, then it becomes an easy job to make a lot of dollars out of these particular markets. So I would like to give a disclaimer. This is not a recommendation to trade. This is a purely educational. You should know that financial markets are risky. So if you decide to participate in these markets, then you should be aware of that. And you should probably consult a person who is very skilled and licensed to make decisions for you. But I prefer that you go and learn, understand how these markets work before you get to participate. So at this point, I'd like to give the floor to Robert so that he can take us through the technical analysis of Euro USD and also the outlook for the fourth quarter of this year. Hello, Robert.
Okay. Hey, Rufas. Thank you for the awesome presentation. As you've said, you've handled more of the fundamental analysis. So let me have a look at the technical analysis and see. I cannot share. Kindly allow me to share my screen. Awesome. So I hope everyone can see my presentation. Now, when we're looking at the euro, we apparently have a trade that is running that is up 103 pips in one position, the other one 101. But basically, let me explain why I took this position. And once again, as Rufas has said, this is purely educational analysis, that does not construe to be an investment advice. Yeah, actually, this is something that we took in class with some of our students here in Thika, and we were trying to understand more about trading strategies. So if you see this trade, if you look at this trade, we took it, I just have to look at the timestamp over here on 12th. So 12 clearly is around here. So why was this outlook bullish at that point in time? Why did I decide to buy? So I came in here. I normally use a trading strategy called the ICT method as part of my trading arsenal. So I looked at where price. Remember, technical analysis is all about looking left and trading right. So we are looking at historical prices. Where was price before? Right. So in this case, I came to this candle. In this case, this is what you'll call a bearish order block. What is a bearish order block? It's basically bullish order block. Basically, it's the last bearish candle before a major move that breaks market structure. So if you look at this was probably the entry on it, yeah, on that price. And this is where, like, if you look at my entry was at that 96.85. So my work was to enter here and wait for market to play it out. And once again, we know reversal patterns that we look at. We look at the double bottoms, we look at triple bottoms, we look at the head and shoulder. And so this was more of like a W pattern that I was looking at. This is a double bottom, and I was looking at price to get to this level, and which was in line with now this whole block over here. So price did that, set out before kind of tended to break out. But basically this price was testing once again this whole candle. If you look at this price, for those guys who love sniper entries, the whole of this candle acted as a zone. It was purely a zone. So you could have also looked at price at 0.9635. That would have been a really sniper entry the following day. However, we were already on this trade. So we were looking at opportunities for price to rise. And indeed, price did rise. However, our take profit has yet to be hit. So we are looking at price to head over to 0.9925. Why? Why is that region? So if we look at higher time frames, let's say the weekly, this is the weekly time frame. The weekly time frame, we can see another candlestick over here. This is the bearish order block. Basically, this is the last bullish candle before a major move that breaks structure. So this candle over here, if you look at, I'm looking at price to come to this region over here. So if we draw it up, sorry for that. So it's 99.25, 0.9925. So that is a region I'm looking at to see price retest that area. Then, as Rufas has shared, the outlook still remains bearish on the euro. But however, remember, market conditions do change. So we are looking at what the ECB will be reacting to. Of course, as the inflation continues in the eurozone, especially, it's more of a supply constraint thing. So we have the ECB trying to prop up private businesses, public investments to ensure that they are taking care of the supply constraints. And we as traders, our work is to react to what price does, you know. So that is the outlook I'm looking at on Euro USD. And that trade has been playing out as per that. Remember, as a trader, your work is to make sure that you're protecting your profits. This is part of, you know, trade management. Yeah. I know most guys just getting into a trade and, you know, they forget about it. You should be able to manage your trades. And in this case, you know, we moved our stop loss. The risk to reward to this trade was 1:5. That is what we were looking at. So basically, if you look at this entry, it has already been secured. The stop loss has been moved in profit. So that means even if this trade was to come back down, then we would have come out of the market with some pips. However, we've booked profits along the way. So this is just one of the remaining positions that are running on that particular pair. So that is basically more of what I wanted to cover. For more on order blocks, kindly FX Pesa channel. There's a lot of information out there. Of course, Rufas is doing a pretty awesome job with the novice to pro. Anyone who is a beginner would before visiting our satellite offices, for example, if you decide to come to Thika and you feel that you're not able to consistently come to Thika, you'll have to come to FX Pesa trading channel. Just have a look at the novice to pro. see what Rufus is saying from episode 1 to 10, then come to classes in Thika with just questions, or maybe to get some clarifications on something you didn't understand. So that is a great starting point for everyone who's following this presentation. On order blocks, you'll want to study a presentation that was done by Matthew and Samson. Go back through the videos and you'll see that presentation on order blocks. Then you should get to learn how to seek entries and exits using order blocks, because like, for example, the exit we've seen, the exit will be on the weekly time frame, and it's purely out of that order block there, as you can see. So that's just about it. With regard to Q4, as I've said, is more of as data presents itself. So market could hit this price level, 0.9925, which is basically this block, reverse or continue up until, let's say, let me draw this up. Yeah, around 1.0050, around that area, because we have a quarter point there at 50. So those are areas price could go to, but long term, the dollar, as Rufus has been saying, that the dollar tends to be more strong. So our work as traders is to react to price and make advantage of those moves. And remember, this business is more of probabilities. So make sure that along the way you're able to book your profits and maximize on the setups that you see. Rufus, I think not unless there's a question.
Thank you, Robert. Trying to check on YouTube, no questions so far. So as we approach the end, I urge our viewers to kindly raise any questions, if there's any, regarding the presentation. Sometimes when you give questions or any kind of feedback or responses, they really help in the session. We understand whether we have delivered the content or whether there is clarifications to be made. So this is really impressive. Just for context, Robert entered this particular trade on the 12th of October. Today is 20th, so he has been in this trade for 8 straight days. So you should know that in order for you to hold on to such a trade for such a period of time, then you need to practice a lot of patience and have a deep understanding and conviction for your trade. All right. So as per the outlook for the Eurozone and also the direction we're expecting, I'd like to mention that first, there was a recent election in the British Parliament where they elected a new Prime Minister after Boris Johnson. So we had Liz Truss, who lasted for about 45 days. She spanned 2 different monarchies. But eventually she had to resign today. So the main reason, the basis or the foundation of her campaign was to basically strengthen the economy, support businesses. So she had promised a lot, and this majorly along the lines of tax cuts for businesses and for individuals. And by basically doing this, she was doing policy that is basically against what the Bank of England is doing. So as I mentioned, follow the central bank. So the Bank of England is basically tightening, cutting interest rates. At the same time, they removed all kinds of stimulus in order to remove the excess supply of pounds in the market. And these would support their currency and basically help the economy survive through the high inflation environment that they have been experiencing this year, currently standing at over 10%. So any attempt to pump more money in the economy would be working against the efforts that they have been doing to control the cost of living in the UK. So it's not something that is central to the UK. It's also central to the Eurozone and a large number of other economies. So as the US gets more aggressive in its tightening, it's hurting other economies. So currently, what we are experiencing in the Eurozone, they are also doing the same thing. Last month, they hiked interest rates by 75 basis points. So in the next meeting, I expect this to be around 25th of this month. They will be meeting, that is the European Central Bank. And once they meet, we're expecting another 75 basis point hike. So this is in a bid to control the rising inflation. However, as already mentioned, the interest rates are way too low compared to what we have seen in the US. So if the Fed hikes and the ECB hikes, one of them remains significantly stronger, and that is the US. So the Euro USD bearish market may continue, especially considering last month. So the other thing to notice is that the European region, or the European Central Bank, basically covers 19 countries. So among these 19 countries, they are not all at the same level. We have some of the strongest economies, such as Germany and France, and we have very weak economies within the same Eurozone. Some of them have taken way too high of a debt, including Italy and Greece. And whenever the ECB makes policies, they affect all of these countries. For instance, what you are seeing right now with the inflation rate going up, bond market getting crazy and very volatile, some of these economies are being forced to offer a much higher return on bonds or yield on bonds compared to the stronger economies like Germany. So if you are to invest in a bond right now, would you go for Italy that has a way too high debt, or would you go for Germany? So if you go for Germany, you get a lower rate, but if you go for Italy, it's a much higher rate. But at the same time, you realize that there's a spread between the two economies. So as much as this spread keeps on widening, then the smaller economies keeps on losing. So the European Central Bank is forced to offer an incentive, support, and reduce the spread between these two particular groups, stronger versus weaker economies. And this basically implies printing more money into the Eurozone, and this is weakening the euro further in the markets. So we don't have as much time to go into the details, but this is an assignment for you. Try and understand the bonds market, how they work, especially in the Eurozone. And once you understand that the Euro, or the European Central Bank, must go ahead and keep on printing more dollars, then you should know that the outlook for the rest of the year is that the Euro keeps on losing against the dollar. So if this happens, then squeezing in positions becomes way easier, especially when you consider the current channel that we are having. So notice that the market keeps on struggling to get to the upper side. So there's a lot of struggle getting to the upper side. In this case, there was a half movement, another move towards the upper trend line. Some smooth movement downwards is the impulse phase, and then a struggle towards the upper trend line. An impulse takes less than a week, then another struggle towards the upper side, impulse, and then another impulse in this case before the market cooled down, and now it seems to be struggling to get to the upper trend line. So in this case, the key price level seems to be an area somewhere along the upper trend line. So if this particular price was to get to the upper trend line, then this would be an interesting level, because it would be similar to what we are seeing here, or even similar to what we are seeing here. And this would be a premium area to look for an entry, especially targeting that the euro continues losing against the dollar. So if something was to happen similarly around this area, and Robert gets to hit his take profit, then probably now we start looking for trades in the downwards trajectory. So this particular trend has lasted for over a year. So unless something changes fundamentally, then the fundamentals indicate a continued direction towards the lower side. So it's a very simple thing. Keep following both of the central banks. Look at the decisions they are making. Also follow the war between Russia and Ukraine. Look at how it's affecting the Eurozone. Look at the cost of energy. It's a major contributor to the inflation we're experiencing in the Eurozone right now. And once you understand these concepts, then it becomes a very easy decision to make money out of the Euro USD. So remember, the Euro USD is one of the most liquid currency pairs. So even if you are a scalper, then it will be your favorite, because the spreads tend to be minimal, or the difference between the bid and asking prices tends to be minimal on Euro USD compared to all other currency pairs. So if you don't have an account yet, make sure that you register for an account with FX Pesa. Begin your trading journey. You will be getting daily updates and daily webinars from our team. The team is big. It's not just me and Robert. We have more trainers. We are doing these webinars daily. If you need a physical session, if you're located in Vika, you meet Robert. You can go to our offices in Kitengela, Isri, Nakuru, as well as Eldoret. And also we have another trainer at our head office in Westlands. So feel free to meet our offices, and we'll give you support at any given time. So thank you very much, guys. Thank you for your time. Thank you for your participation. We always appreciate you taking your time to join these sessions and also to respond to the questions and queries we make every now and then. So a good question, hi, where are you using demo for? We are not allowed to use a live account on these sessions, basically because it's not investment advice. This is purely educational. So we do this to help you understand the concepts. And once you understand the concepts, then you go and do some other study, get an informed perspective before engaging in trading. So hello, just joined and allowing the session. Welcome, Thierry. Thank you. So if you missed something on this particular session, remember it's live on YouTube, so you can always go back to the same session, rewind and rewatch the particular session that you did not get. And if you need to make any kind of follow-up, then you can always reach us. You can reach any of our agents, just ask for Rufas or Robert, and you'll be in contact with us directly. So thank you very much, guys. I hope to see you on the next session.
Thank you. Cheers, guys. Have a good one.
So before we go, I think there's two questions that we missed. ICT concept is best combined with fundamentals. Yes, absolutely. This is from Emperor Traders. Thank you for this. How can one control emotions when trading? We have a plan. Make your decisions before you enter your trades. If you make your decisions before you enter your trades, then you have basically phased out your emotions in trading. So the way you do this is have those conditions written down. So if, for instance, there's a condition for adjusting your stop loss, make sure it's written down before you make your market entry. So have a condition, for instance, don't follow this. If my trade goes into the profit by 20 pips, then automatically my stop loss goes to my entry point. So that's a condition that you can set. Of course, 20 pips is just arbitrary. You'll have to make your own decision or your own condition. And once you do this, then every time the market moves by a certain point in a particular direction, you will have a rule dictating how you respond to that rather than acting out of emotions. So thank you, Mushemi, the chef. Thank you, guys. Thank you. Appreciated. Hope to see you
Rufas,
on the next.
Yes. Just to add on to a mantra that will help you deal with the emotions. Yeah, we normally say plan your trades and trade your plan. Basically stick to that, yeah, because in most cases, anytime you don't have a plan, then that means when the emotional aspect of trading comes in, you don't have a reference point. So you end up, this is where like revenge trading comes in, where you've lost money, you come back to the market to try and recover the money, you lose more. But if you have a plan, then it says before even you decide to have that revenge trade, then you're already looking at the criteria that trade must meet for you to get back into the market. But if you're going in blindly with no plan, then most likely you'll get to lose out.
Exactly.
Yeah.
Plan your trade, trade your plan.
Cheers, guys.